Geez, I just remember you, Katie, as being pretty constructive all along in our darkest hours. And once again, I mean, the S&P is well above 3,000. Well, not well above, but 3,025, something like that, 3,030. And you were constructive. And long term, I think, intermediate term is all we should really talk about, because you think this week might be ripe for a pullback.
That's right. Some downside volatility would be very natural. And here around the Fed announcement, we have a buy signal in the VIX, which would be inversely correlated to the S&P 500. That has implications for maybe 2 weeks. So I really want to focus beyond that. And the sentiment right now in the marketplace is such that it's not overly bullish. And that means there's probably buyers waiting on the sidelines, ready to add exposure on what they see as a better buying opportunity into some weakness. I
mean, I know we've gotten above some of your levels that were going to cause some problems. So what's the next target on the S&P?
Right. So the major indices have all really broken out, except for maybe the Russell 2000 index. As you know, small caps have lagged, but the major large cap indices have broken out to new highs. And that, of course, is a bullish development from a technical perspective. Those former resistance levels become support going forward. They're, I'd say, maybe 2 to 2.5% below current levels. So that tells me that downside risk is probably limited during a pullback or some additional consolidation. Momentum is still positive, intermediate and long term, and breadth is very healthy, meaning stocks are rallying on up days.
So intermediate and long term, what kind of S&P targets are not unrealistic?
The breakout that we saw by the S&P 500 actually in 2016 yielded a measured move projection of about 3280. That just sort of assumes that the uptrend will maintain its trajectory.
3280.
And that still seems very realistic, really within the next year or so. Now, we had a buy signal in November 2016 from one of our long-term momentum gauges. It's called a monthly MACD indicator, that this month is sending its first new buy signal since that one. So that's compelling to me, too.
MACD, that sounds like a musician. I think my kids...
I'll spare you the details.
Moving average convergence divergence.
That's right.
MACD seems a lot more catchy.
Because earlier we were talking about the disappointment, buying options for pullback that then would be a great buying opportunity, setting up for the kinds of levels that you're talking about over the medium to longer term.
That's right. We had a massive oversold condition after that May pullback, and that was on an intermediate term basis. And we really see that maybe 2 to 3 times a year. Of course, the preceding one was back in December of 2018. So the market still is very favorable for not only the intermediate but also long term.
Katie, you mentioned that the market has seemed broad enough in its participation on this run higher. Big question has been whether certain other groups, like more cyclical groups, financials acting better. Is there going to be kind of a longer-term transition underway, or is it just going to be kind of more participating on the upside?
Well, I stay with the existing trends. And, of course, technology, consumer discretionary, and I guess more recently communication services have really established themselves as the market leaders and have remained so when we're seeing the market rally. The newfound participation and breakouts in the financial sector is compelling to me, and I think that's only a good thing for the broader market. Small cap underperformance to me is not a big concern. It's not new. It's been the case since February. I would love to see it spread out to that region. It would show that we have more risk-on positioning underway. But I think on the sector front that we'll see sort of more of the same.
Can I ask a question the other way? If we were to see disappointment from the Fed this week and the market started to recalibrate how much Fed easing we may ultimately see, are there levels on the downside that would make you say, okay, this is not just a short-term pullback, but something that calls into question my longer-term optimism?
There's always breakdown points, right? I think hopefully before we see any kind of major breakdown, say the S&P back below its 200-day moving average, something like that, we would see a real loss of market breadth or that participation and also overbought sell signals. So we have ways of getting ahead of that breakdown such that that's not in and of itself the only thing we're looking for.
So it's not just any level if we fall below that it would make you
she does.
That's right.
She does your stuff too. I mean, what's the 10-year indicating for yields?
Oh, I was.
You'll do that.
I was going to say. Oh, yeah. So
you'll do that. You're asking about the stock. You're asking about the stock market. Just go ahead.
Look to see. Could I ask where 10-year yields
Go ahead and ask. Yeah.
Well, it's interesting. So we obviously are in a downtrend in yield terms, and we've seen the 10-year stabilize around very important psychological support of about 2%. If we were to see them take that out, the next support is 1.4. So that would be a really big deal.
Wow, that's an air pocket.
Exactly. We do see a loss of downside momentum in the intermediate term gauges, but not until you see it clear about 2.3% on the 10-year. Do you actually have a reversal? So I'd say neutral bias is probably appropriate as long as these levels are intact.
And Bitcoin, the next halving is in May of 2020, and do you have an indication of 55,000?
Oh gosh, 55,000.
That's what.
Is that right?
It's dropped now under 10. We're like
95, yeah.
$400.
You know,
but the next halving
it's a major base breakout on the chart.
You look at stock flow. I'm just saying this for some of
The Bitcoin believers.
Yeah.